if gold goes up, silver goes up just slightly less than 2 times on average. If gold goes down, silver sinks twice as much on average. So if you expect gold to go back up over 2000, maybe to new high ground, whatever, then silver. If you're a punter, the way to play it is actually in silver, because if gold goes up 10%, it'll go up 20%, and it could actually even create a crisis in the silver market, which might drive it even higher. So yeah, it's a pretty good play. I don't think, however, that what we should be expecting is silver becoming remonetized. History showed that the right relationship approximately between gold and silver, when silver was also money, monetized, I should say, was around about 15 to 16 to 1. I don't think we're going to get there. But what we could see with a failing fiat system, which after all is what the gold price will be telling us, is that you could see the gold-silver ratio moving down on that sort of twice times relationship. You could easily see silver, I think, falling to 50, 40 maybe. If you just want to play the game, then silver could actually be quite an interesting thing, because so you've got the industrial demand situation on the one hand, and the mispricing in the market, because everything is being sort of shuffled through, and it's only at the margin that people, the industrial boys are actually buying the stuff, on COMEX or the LBMA or wherever it might be. Could be a very good play in the industrial side. And then, when speculation really begins to hit the silver price, you'll be hearing people talking about it's money, it's the poor man's money, you got to have it. And so, we've still got all that ahead of us. I mean, we're nowhere near there yet, but I would expect it at some stage, certainly. The way silver has been behaving quite clearly is there is a shortage of silver around. I think that the swaps in particular, who are mainly the bullion bank trading desks, having great difficulty closing their positions. They managed to get their go net long not so long ago, but that position is eroding quite rapidly. And I think they're getting a bit worried. They must be getting a bit worried. I mean, these are proper traders, these guys. They know more or less what they're doing. And I mean, the thing about silver is we're not talking about monetary demand. I mean, you and I will probably think in terms of monetary demand, but actually, just look at the industrial demand. I mean, China's plans for manufacturing solar panels and I don't know, all the electronic kit and so on. Quite a lot of silver goes into electric cars and, I mean, air conditioning, the lot. I mean, there's the demand for silver is going to outstrip available stocks very, very quickly. And so I find it very hard to produce a bearish argument for silver. It's in the same, if you like, category as lithium, copper, in that sense. Silver, I think has got everything to play for. I mean, I really, and the other thing is when you look at the stocks in the London Metal Exchange, not so much that, but the LBMA, and I think also the COMEX vaults. I mean, if I was a user of silver in the industrial sense, I think I would leave my silver in those vaults until I need it. So the stuff, I think, just disappears out of the back door. It's not a question of suddenly people, buying it, and it's actually the current owners take it out because they need it for manufacturing. What better place to store it than in a secure vault? I think quite a lot of what we see, and you've also got deliveries through COMEX and all the rest of it. And I think it's it's industry drawing down its stocks. It's got its stocks sitting, if you like, fairly close to the exchanges. If I was a manufacturer who required silver, I would store it in the vaulting system. I don't, I'm not going to leave the stuff lying around the factory for people to steal, or put it in a safe in the factory and somebody just takes the safe away. I'm not going to do that. Come on. I'm going to store it in, in the Shanghai vaulting system or the London Bullion Market Association vaults. Um, Comex, why not? Wherever, wherever I buy it, really. And probably the other thing is that a lot of the silver that industry uses doesn't go anywhere near the markets. You find that people are dealing direct with refiners. They're even dealing sort of almost directly with the miners. When you close down lines of business, you are closing down supply while at the same time consumer demand is declining. So the idea that a recession means collapsing prices is a complete fallacy. It's not true at all. Commodities are just one portion, if you like, of the input costs on things that you buy and sell. Only one. The rest of it are establishment costs, labour costs, taxes, and all that sort of stuff. But basically, if you're going to have a high level of unemployed, okay, you get less demand, but also you get less supply. So this is why everybody was surprised in the 1970s when we had similar conditions, yet we had roaring inflation. Basically what happens under those circumstances is that with a fiat currency, there is a tendency for people to lose faith in the purchasing power of the currencies. And the first people who will lose faith are always the foreigners. Domestic users of the currency are the last to wake up to this. But foreigners who don't actually have to hold, say, pounds or euros or whatever the currency is. They've got to hold some dollars, because they trade internationally, in sort of goods and commodities and so on and so forth. So, the dollar is a slight exception to this. It's got a special privileged position, if you like. So far, sterling has if you like, retained some strength. And the strength has been the initial reaction to rising gilt yields. What's happened is that interest rates have got to rise a bit further than everybody thought, etc., etc. So, if you put everything else to one side and you just think, well, I might get paid 5% of my sterling cash balances. Whoopee, this is good. I'll go and buy sterling. Sure. Okay, that's one reaction. But when you sort of think it through a little bit more and you think, hold on, what's actually going on here? What's the government funding requirement? What's it doing to government finances? What's happening to the economy? Oh dear, I better sell my sterling. So this secondary reaction. And of course, we sit here in England thinking, well, why are the foreigners selling our currency? Well, I know the answer. The majority of people who actually use sterling for their day-to-day purchases would be completely unaware of these dynamics.